So trends, I love teaching this area. And let me check the questions before I get into this particular area. So let's see. Will you touch on opportunity to buy with low money down? How can we get in? Douglas, the short answer is the last 5 slides, which talk about my boot camp. That they teach that. Linda Evans, what do you mean by institutional investor? Essentially somebody running a hedge fund or a pension fund that's very large. So a lot of Class A buildings cost $100 million or above, which means that the people that are holding them have to have a huge amount of equity. Institutional investors like CalSTRS, the teachers pension fund, buy a lot of buildings. Just about any hedge fund that's in the stock market is holding some sort of real estate. Let's see. In rent control areas, are such as Santa Monica, California, are these value add opportunities? Well, Michael, it really depends on the area. So that is a it depends answer. We'd have to look at the individual situation to see if that rent control building can be converted into a market building. But there's possible value add opportunities. Keep in mind, one of the ways to raise rents in an authorized fashion in rent control areas is to rehab the property. So that's actually understood as one of the ways to get around the rent control issues, but it's a complex challenge. All right, trends. Here's my favorite part. So here's the first piece that you need to know about. A fundamental change is taking place across America, and that is that rent is now the new buy. For the first time ever, Americans prefer to rent. The mouthpiece of the Realtor Association, the NAR, the National Association of Realtor, they suggest that 5 to 6 million new renter households will be created in the next 10 years. That's a staggering number, given we don't build anywhere near that many number of apartments. So we're creating a staggering shortage, and this is the Single Family Association predicting this. There's actually other folks predicting an even higher shortage. So when you look at ownership, only half of all renters, and this is a Wall Street Journal and Appfolio analysis, only half of all renters said that they anticipated becoming homeowners in the next 5 years. That's the lowest number, right? If you look at 20 or 30 years ago, you would ask people, are you going to become a homeowner? 80 or 90% would say yes. Now it's only 50%. And the reasons for that are not exactly what you think. Yes, can't get a mortgage, 31%. Look at these reasons. Don't want to own, 43%. Enjoy renting, 39%, much more than the mortgage. People's mindsets are changing, and it's changing America. And another reason for that is they're getting priced out of good places. They want the good schools, the safe neighborhoods, the parks and playgrounds, community centers, friendly neighborhoods. These are all reasons that people gave for why they're renting instead of buying. And millennials are clearly not buying, homes at the same rate as previous generations. Check out this chart, right? So you look at home ownership, and it's falling for everybody, not just millennials, right? So home ownership peaked right here, which is about 2005. And so it's dropped, but it's really dropping and continuing to catastrophically drop here. This is 2017, end of 2017, and it's dropping for the young folks, right? So the blue line are the younger folks, and both of these are troublesome, but look at how steep that line is. And nobody's really sure why this drop is happening. Some people talk about student loans, some talk about the fact that the millennials basically can't build equity. They've got all kinds of challenges. Home prices are too high, beginner homes are not available. Not sure what the reason is, but I know what the benefit to multifamily is. There are millions and millions and millions of people that either can't buy or won't buy single family homes, and this staggering drop in the home ownership rate is huge opportunity for multifamily. Another thing that's happening, which is interesting and odd, is that the baby boomer generation, they were supposed to downsize, right, from big single family homes to slightly more manageable single family homes. They're not doing it. They're actually downsizing to urban apartments. Maybe they want convenient services. Maybe they want easy access to amenities, or maybe they just want to be closer to the kids because the kids want to live in an urban environment. So these people are actually buying apartments or renting apartments. Some of them are buying condo units instead of buying single-family homes, but a huge number of them are just renting. So this change, this trend, this mega trend represents a huge amount of opportunity, a massive tailwind for multifamily over the next 13 years. I can only talk about this for a few minutes before I move on to the next section, but I can tell you, if you're a data-driven person, you would love a website called weareapartments.org. That's WEARE, we are apartments with an S.org. This is a nonprofit group that projects the shortage of apartments over the next 13 years. They're projecting 4.5 million apartments shortage based on what we're building and the trends, the population growth. The website is very graphic. It's very colorful. It shows you charts and graphs. You know what I like most about the website is that you can slice it down by metro. So if you go in and look at the huge difference in demand and supply for a place like Phoenix, you'll see the huge opportunity in Phoenix. Check out Orlando and you'll see a massive difference between supply and demand. But then you see places like Pittsburgh, which has so much old inventory that's empty that at no point over the next 13 years will it have the demand being above the supply. So it's not even. It's not all across the U.S. It's not every single metro. It's important to look at it on a metro by metro basis. Why is this important? Because of recessions. A whole bunch of you are sitting on the sidelines in real estate and not doing anything at all because you're like, oh, the market's overpriced. Now, keep in mind, you were saying that 2 years ago. You were also saying that 4 years ago, right? So you've been sitting on the fence, and you're still sitting on the fence. My argument is simple. A recession is coming, and it's a good thing. I believe that there's going to be a recession in 2020. Recessions calm down markets. They calm them down. Markets become more rational. The real estate market definitely needs to be more rational. But why should it prevent us from buying when the next 13 years, the shortage is going to continue to grow? The recession will start. The recession will end. When it finishes ending, the prices that have been stagnating for a year during the recession will start to go up again. That's why I'm bullish on multifamily, because I follow fundamental long-term trends. I don't worry about the 1 year that's going to be a recession. I simply won't sell any asset that I'm holding during that recession. I'll probably pay my investors a little bit less in their quarterly checks, but we'll get through it. And when it comes out on the other end, we still have a staggering supply shortage. That's a huge trend.